Hello, everyone. This is Steve from Beyond the Trades, also from the microefutures.com/equities/etc.com trading room community. And today, this short video is going to be yet another swing trade strategy setup that I personally have been using successfully recently in this market of late. Many of you have watched my earlier trend trading, swing trading video. This is going to be what's called a trend reversal, longer term moving average strategy. So that first video went over how we can capitalize on swing trades using shorter term moving averages in a trending market that we've seen pretty much in 2023 and 2024. But this trend reversal strategy now is a perfect setup for when price does run way above those moving averages, the shorter term moving averages I discussed on the last video, in which uh, they start to pull back and they can give us a great risk versus reward opportunity trade. So we're going to show some examples of three trades that I'm actually in that has this setup. It's really not that difficult to identify, but a key footnote is the win percentage back testing this strategy is not that high. Okay. And I'll explain the reason why when we go through the examples. However, the risk versus reward R&R is a very good profit factor. Reason being, as you will see, your risk when you get stopped out is very small, but the opportunity for some gains is very great. So let's go over some of the criteria we are looking for. All of our trend reversals, or most of them, I should say, will be available. The setups, the strategy. I use the Trade Ideas uh, swing trading trend change reversal scan to help me identify charts that have this sort of setup. And if you look at the bottom, for those of you after we're done with this video, if you would like to get not only Trade Ideas, but the Trade Ideas trend reversal scan or any other scan that I may use that I may have coded, you can simply go to Trade Ideas. I believe if you use code savings 15, they give you a nice discount. But I'm not here to market Trade Ideas. I'm just letting you know how I find these setups easily. Without Trade Ideas, it's just simply you going through a ton of charts until you find a setup that appears that you like. But so let's take a look at what we're looking for. Okay. Before we look at some charts, right? First thing we're looking for is an institutional ownership percent of at least 30. So let me bring up an example of one of these trades, trend reversal trades that I am in right now that I took. And this would be PANW. I do use the daily chart, okay, which is right here on the left. I also use the 5-minute chart to help me with entries, all right, to get the best entries. And then on the far area here, I have a weekly chart that will I'll take a look at to see if multiple time frames the chart setup is looking good. In the middle here, you see the profile of the stock. Now, what's good about this is this all is part of my Trade Ideas setup. And using Trade Ideas, when I click on a chart, in this case, the daily chart, because I'm looking to swing trade, I will automatically, this will pull up the key information that I'm looking for, the profile on the stock. So if I'm looking for institutional ownership percent of at least 30%. Follow my cursor on the bottom here. All right. I would go to this profile before I even look at charts and say, okay, institutionally speaking, it's 84% institutionally owned, which you can see right here. So it checks that box. All right. I'm looking for a larger float in excess of 100 million or more. So I would go to the float section. Is it over 100 million? And I look at Palo Alto. Yes, it is 300 million. So it checks that box. Now, it must have a strong negative catalyst. And let me explain what I mean by a strong negative catalyst. What I'm looking for, all right, is a drastic drop in price. Now, follow me here, okay, on the left daily chart where you see me circling the cursor. You can see last week we had a massive drop. It dropped on negative earnings straight to the 200-day moving average, that blue line you see at the bottom. So it was a violent drop, okay, on a strong negative catalyst. And the catalyst was earnings. It was bad. Now, why am I even looking to go long? Because this is a long strategy in a stock that has a strong negative earnings catalyst. Well, what we're looking for is a violent drop straight to the moving average where it stops. Notice it didn't drop and just blow by the 200-day moving average. It dropped exactly to the 200-day moving average, right? So what that's telling us is obviously it was algorithmic driven, okay, as most violent moves are these days, which tends sometimes to be an overreaction. So sometimes these negative catalysts can be an overreaction in which they'll start to correct themselves. Often earnings can be in overreactions. Now, I'm not saying earnings not bad, okay, but earnings, okay, has a way of settling back down several days later or a week later. So in this case, we do have a strong negative earnings catalyst. So we check that box. Again, look on the bottom of the screen. Yes, price did violently drop to the key longer term moving averages. I personally used the 200 back to the chart. The 200 is the blue. And I also use the 50-day moving average, which is the maroon. Now we are talking longer term moving averages here. All right. So that's what we want to see. You can use whatever longer term moving averages you use. Okay. I use the 200 and the 50. You don't have to agree with the 250. Just know that a lot of other people and machines, all right, algorithms, look at the 200 and the 50. All right, which means it's good. It's an area of interest, but you can use the 65. You can even use anchored VWAP, okay, in lieu of prices dropping down to a moving averages. What you're looking for is a longer term area of support. So that's the concept, a longer term area of support where price dropped to, not price broke down under, but dropped to, like you've seen on this chart. Okay, so that's what we're looking for. Now, let's understand the dynamics of what happens. Just because price drops, we have a couple of negatives, all right, against us here. And this is why this strategy doesn't have a high win percentage. So, what are some of those negatives? Well, you often hear myself preach, you hear Brian Shannon preach, you hear so many other individuals preach. You want price to be above the shorter term moving averages you use. And if you look on this left chart, my shorter term moving averages is the green, the 20-day moving average, and the orange, the 10-day EMA moving average. And they are both trending down. So that's a negative. Okay. All right. So in our mind, we want to make sure that price is indeed going to confirm that it wants to go back up, because often, many times, okay, what you will find that price drops, okay, quickly, and then that first next day, that little red candle you see next day simply could be shorts covering. All right. And in lieu of any new buyers coming in to the stock, once shorts are done covering, that's when you see price drop back down, in this case, underneath the 200-day moving averages. Okay. Once you see that price is indeed going to hold the 200-day moving averages, it becomes an excellent low risk, good reward trade entry for you, as you see in this green line over here. So why is it a good low risk reward? Because your stop, you was sized correctly, would simply be underneath the 200-day moving average, the blue. Okay. You was sized correctly. So once it would close on the daily chart underneath the 200-day moving average, you would exit this trade and your loss would be very small if you sized your shares accordingly. All right. The reward, as you can see, is great, okay, because price can move back up to the next level of resistance or support, in this case, the 50-day moving average, or price can go straight back up to where it was around earnings time. In this trade that I'm in, you're seeing on the 5-minute chart here how it's having a really, really good day. Okay, it's up over 10%, Palo Alto, and it's approaching the 50-day moving average. So what I might do, okay, whenever it gets to the 50-day moving average, if it does, I might sell half, okay, to lock up profit, and then let the remaining half run, trail stop it in the money. So I'm guaranteeing myself a win on the trade, and then let it run to see if it wants to test the high that it was at before price dropped on the earnings. So hopefully I am making good sense in what I'm saying over here for this type of strategy setup. So if you also look, okay, and you can do this on your own, okay, or we can take a look at it shortly. You want to also look at a stock called Adobe, ADBE. Adobe is an example of a trade I took last week with the same strategy setup. Another trade that I took that has the same exact type of setup look would be Crowdsource, which is CRWD. So you can take a look at CRWD and you will also see, okay, on those charts, the same type of setup that appeared. So, so to recap, okay, this strategy, if not a strategy, the concepts, okay? But recap, you're looking for stocks with an institutional ownership percent of at least 30. You're looking for a larger float of at least 100 million or more in the float. You're looking for a strong negative legit catalyst, in this case, earnings, okay? But it could be any other type of legit earnings catalyst. Now, if you don't know how to read or understand catalysts, you should really be in our equities ETC division in our trading room community at microefutures.com. I cannot stress the importance of the teaching in that room that we have. So it could be a bit, even if you only stay for 1 month, you would get unbelievable education. All right. So you must also have price violently drop into the longer term moving averages. And if you're looking to use some scans to find you these sort of setups, the information on trade ideas is at the bottom. But let's look at Adobe. So let's go to a second example. In Adobe, I entered this last week. Adobe, same thing. Last week had negative earnings. We had a violent drop in price. I'm on the left chart here where you see the cursor moving. We had a violent drop in price almost down to the 200-day moving averages. It eventually made its way down to the 200-day moving averages. So that caught my attention. So I said to myself, okay, let me look. Okay. Float over 100 million. Okay. I'm at the profile now. All right. It's highly institutionally held, more than 30%. It has 83% institutionally held. All right. Must have a strong negative catalyst. It has those negative earnings. Price did violently drop down, okay, to the 200-day moving average here in blue. All right. So I don't immediately enter because I want to make sure the shorts get done covering. And more importantly, I want to make sure new buyers are dropping in. So I would look for this candle, not the green candle you see, but the entry would be that second candle on a break of that first candle high. And then, as you see, we had a nice price trading up. So that was a good example of Adobe. And yes, I'm still in Adobe right now. Once it starts to slow down or pull back, I probably will sell half, trail stop the rest in the money. So those are two good examples. Now, which I know I'm rambling on a lot here, but what's important to remember, there is so much more to buying the so-called dip than just buying the dip. Why do I have institutional ownership percent of at least 30%? I want larger institutions in this stock. They trade more efficiently, okay? Meaning less wild swings. When you couple that with having a larger float of 100 million or more, now you get more steady price action. So that violent drop can indeed be an overreaction because stocks that are highly institutionally held and also larger floats typically don't have a huge violent drop because they'll sell slowly over time to get the best price. So that tells me that violent move that it could have been algorithmic driven. We never know for sure, but I think we've all seen what happens in nanoseconds when news comes out and some of these charts move quickly. So having institutionally held high, larger float, we get more predictable price action for entering. Now, the chart crowdsource or CrowdStrike, excuse me, CRWD, you could see the same thing happen. Now, it wasn't as violent of a drop, but it did have earnings. And if you look on this left chart, follow my cursor, it did drop last week straight to the 50-day moving average, the key longer term moving average, which is maroon, and then the same process. Okay. Yeah, you could enter it. Okay, following day, once you know that the shorts are done covering and new buys might be coming in. And then, as you can see, price is still going up. Probably once it hits that blue line you see up top, I'll probably sell half, lock in profits, and then trail stop the rest if it wants to continue to run more in a trend type of setup. So hopefully that helps. If not, if you're a member of the equities ETC micro e futures or microefutures.com room, by all means feel free to direct message me or post a message to me and I can answer it. If you're not in the room, why not? You should be. I post all my trades live. As the members know, I'm having a really good year in 2024 and had a great year in 2023 using I hate using the term two simple strategies because now I'm starting to sound like some of those other gurus, and I am not a guru. I'm just a grinding trader. But I'm having really good success in this market with these type of setup strategies that I'm using. Not only this one, but my trend trading strategy. And if you haven't watched that video, please do so. So, but if you're not in a room and you don't want to be in a microefutures.com room, that's perfectly fine. You can direct message me at Beyond the Trades at Twitter. Okay, everyone. Thank you so much for listening to this video. Have yourself a really good day. I shall talk to you all later.